How to buy a tax lien certificate in California. In this video, I'm going to walk you through the steps that not only just make this practical, make it profitable. Say that quick 10 times. By the time we're done, I'm going to show you exactly where they're sold, how they're sold, when they're sold, and where the profits are made in this. California is a golden state, and there's a golden opportunity here. Now, remember, this is YouTube. They require thumbs up, which is the dorkiest thing in the world. That means right on. Okay, don't do thumbs down. Good. Make comments, send it to a friend. Listen, those algorithms help out and keeps us motivated for me to keep doing these videos. So let's talk about this. California. First of all, California is an interesting state when it comes to tax liens and tax deeds. Predominantly, it is a tax deed state. Okay, back in 1996, then Governor Wilson passed a law, I think it was in July of that year. Somebody can fact check me if they want. And it was that they were going to be, the counties were going to be allowed, or they could choose to sell tax liens. I can't remember, it's been a long time since I've read it. So I was pretty excited back in 96. I'm like, oh my God, California is going to be able to do deeds and liens, very similar to the way Florida was doing, the way I was being, interpreting the rules. 18%, I think there was a 3-year redemption period on it and all that good stuff. Cricket, 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 literally nothing happened. And then about 2 years later, I think it was Orange County, one of the counties filed bankruptcy. Guess how they got out of bankruptcy? They had a tax lien sale. Isn't that interesting? 24 to 36 months, somewhere in that, after they passed this law where Governor Wilson, who may or may not have been Orange County, I mean, come on, there's a lot of things there. But I think Santa Clara County has done one. So what the rule said, if I remember correctly, it said they can choose to do a tax lien sale. Well, the counties aren't going to choose to do anything different. So why wouldn't they do these tax lien sales? They make a lot more sense for the county because the county gets their money instantly. So let's just take the tri-counties of LA, Orange, and San Bernardino counties. There's hundreds of millions of dollars in uncollected property taxes every single year. Now that may sound like a lot. It is, but it isn't. Nationwide, about 99.5% of all property taxes are paid on time. So 99.5% of the properties within a county pay their taxes. So the county's kind of doing a good job. But because of the way the state statutes are set up is we don't care if 99.5% of them are done. We want the rest, okay? So all the rules around the United States, if a person fails to pay property taxes for more than 1 year, the county has the choice or they can put a tax lien on the property. Now, whether they sell it or not is up to the county and how they handle it. Some states say, nope, not allowed to sell it, but the property owner still owes the money. So if I'm in California and I do not pay my property taxes, it may have not gone to a sale, I'm still going to owe 18%. The challenge is in California, they can be delinquent 5 years. So one of the things that Governor Schwarzenegger, I'll be back, he decides when he becomes the governor, the governator, he thought, hey, we're shortfall. The reason they elected me, in a supplementary sale or whatever they call that, not a sale, I'm thinking tax liens, election, they kicked out Gray Davis because of the budget. I mean, California was in a turmoil. They owed a lot of money. And so the first thing Schwarzenegger says is, well, why don't we just go after the property taxes? The county's not collecting it. Yeah, right. Within about 48 hours, there were 27 lawsuits from the multiple counties in the California saying you can't do that. So even though it's the state of California, the property taxes go to the county. This is like the ultimate, power with the county. I want you to think about this. Who controls the title to a property ultimately? It's the county does. So they're sitting there going, yeah, you can put a lien, they can pay it, they can not pay it, whatever you guys want to do. If they don't pay the property taxes, we will not issue clear title to anybody. And if they haven't paid the property taxes for, in California, 5 years, we're going to take it to a tax deed sale. Now, Some of these counties in California are allowed to have a tax lien certificate sale if they choose to. Unfortunately, very few are choosing that. So most of them are going to be a tax deed sale. That means they said, hey, enough's enough. We've been sitting here for 5 years, sending you out notifications, don't know what you're doing, but it's time to pay the property taxes. 5 years come and gone. Now they could creep in anytime they want before that sale and pay those out. Never affects their credit. It doesn't go against their financial statement. You know, think of another debt you can have that you don't have to pay for 5 years, right? But kind of enough's enough. But make no mistake about it, in California, when it goes to sale, you put your hand up, it's a maximum bid situation. So whoever is willing to pay the most becomes a successful bid, or what they call a premium bid. So if it's $15,000 in property taxes, I'm making it up, and it's a $500,000 property and I bid it up to 100 grand, I win. There is no lien or encumbrances on that property. I win the property for $100,000. Now, there is a caveat in California. Caveat in California, that could be a song, right? The caveat is some of these counties will say, oh yeah, but there's a 1-year redemption period. Ooh, not true. All the rule says is if the county makes a mistake, the property, like they sold the wrong property, like you came home and go, what do you mean you sold my property? It was supposed to be my next door neighbor. They got wires crossed, or you paid, they didn't get the money in the right account, whatever the case is. If the county sold the property accidentally, okay, you can call it a sale in default and fight the county for the sale. So title companies won't insure the title for 1 year, unless you know me. I know people in there that will do this. Okay, but what the problem is the counties will call this a redemption period. It's not a redemption period. I'm looking at my notes here. It's not a redemption period. I've seen this before. And it's like, no, stop calling it a redemption period. And again, they don't get together with all the other counties and say, what should we call this stuff? They don't care. They don't know that other counties call a tax lien certificate, all that stuff. They said, no. What that means is the former owner can call it, hey, that property was not supposed to be sold. So I don't want to spend too much time on that, but I get clients that call my team up all the time and say, oh, they said there's a redemption period. No, there's not. So let's just take that off this side. Now, there's really cool, there's kind of a finance program in California. A lot of people don't know this. In the state of California, if I am the winning bidder, in this case, $100,000, I don't have to come up with $100,000. I have to come up with $5,000, I think or it's 7% or 7% and $5,000. I can't remember which. This is called $5,000 or 7% of my bid, and then I've got 120 days to come up with the balance. Oh, that's kind of cool. Hey, I just bought a $500,000 property for $100,000, and I only had $7,000. I think a good deal, you will always find money. If you run into that situation, you call me. Okay, so there you go. Okay, now remember, you're buying a deed to the property. You just don't go down there and go and raise your hand. You want to make sure you do all the research. So when a deed sale comes up, usually about 30 days beforehand, you're going to get the list. You get the list. You want to stick with single-family residential properties. Why? Because you know what a single-family house is. If you know commercial, you know land, all that good stuff, God bless you, go for it. But if you stick with a single-family residential property that you and I already know, you're going to be safe. Then I want to find fair market value. So if the fair market value is that $500,000, you got to look at the property and say, what's it going to take to get this property to $500,000? As you can well imagine, if they haven't been paying property taxes for 5 years, there could be a good chance that the property is not in good condition. So there's all of these conditions in there that meet for a good deal. Now there is a lot going in there. I would not invest 1 penny of my own money until I knew all the risk. Now I told you if you stuck around to the very end, this is all the time we have, I'll help you out. Okay, I've got a brand new course that I'm gonna give you for free. You heard that right, for free, for sticking around. Just click the link down below or go to higginsmethod.com. higginsmethod.com. I got a brand new course that will walk you through all of the pitfalls and all of the upside of this so you and your family can find financial independence. This is Saen Higgins saying God bless and good luck.